For more on the markets, let's bring in AJ Oden, a global investment strategist at JPMorgan, global wealth manager. I was searching for a word to describe what we've seen for the past month or so after that move off the October lows. We're in a backing and filling or something more substantial, more significant.
I think some of the volatility is just a little bit of concern about, lately we've heard this idea about recession again.
Yes.
But if we look back to, the Fed meeting and their SEP, it does seem more like the soft landing is very much in play for them. It just seems like the market's a little concerned that it's possible that, they could potentially go further with rate hikes, although it does seem like a Goldilocks scenario when you look at the SEP.
Yeah, and shouldn't they be happy that their SEP says soft landing, or are they, oh no, it's going to be a soft landing, we need to do more? That's the paradox that we always find ourselves in with the Fed. They haven't done enough because they haven't slowed the economy.
Well, I mean, you even heard Jerome Powell, Chairman Powell, sort of allude to it, right? The economy is still very strong, growth expectations rising. The consumer doesn't seem to be too fazed by higher interest rates, and I think that's where the concern sort of comes in. Does a soft landing turn into sort of a no landing scenario, and then in that scenario, does the Fed have to raise rates higher? And then if you're in that scenario, do you then move into a recession? So I think it's almost like we're getting closer to what's the next phase, and then how does the Fed navigate rate cuts, or do they actually get to cuts before hikes?
What do you think? Will there be more hikes in your heart of hearts? Do you think
I think we've seen the last of the hikes that we've seen in this cycle. Yes, I think rates are fairly restrictive at these levels. We've seen disinflation. If you look at some of the forward-thinking measures on inflation, what's coming out so far for September, using some of the spot prices, you're seeing further disinflation in that core services, that more sticky inflation. I think expectations are around 4.1% for September. And so we're seeing that continue to move in the right direction, although oil prices somewhat of a concern in that how that impacts headline inflation, but we believe that's short-term in nature for now.
Well, but then you worry about whether there's really in the system wage increases on the horizon. And we've got unions still aren't, what is it, 8%? They've been rising a little bit, but from low levels, that in and of itself probably couldn't add to wage inflation. But if it's a manifestation of everyone wanting more because of inflation, then you think that could turn into one of those spirals.
No,
I need more money, and then prices go up because they're paying more, and then they need more money to pay for it. I mean, we've seen that movie before.
Yeah, average wage growth is around 4%, and I think 3.5% is typically indicative of the 2% inflation target that the Fed needs to get to. But to your point, there are a few headlines out there that are concerning to a certain extent, and how that's going to have an impact on the long term. Obviously, the Fed pushing out to 2026 a little bit further is a bit concerning, and so we'll see how that all plays out. But I think some of the headlines, there are pockets here and there, but also you're hearing about a lower quits rate as well as layoffs. So how that offsets will be interesting to see how it comes out in the data in the next couple months.
So suddenly 2024, we're not sure that's going to be a great year for S&P earnings growth. Is it going to be the rebound we've been looking for after a flattish year?
Well, I think we see the S&P 500 touching, all-time highs in mid-2024 at some point. And I mean, that's the soft landing base case, because at some point you believe the Fed's going to pivot and markets should rally from there. Earnings, we've seen positive earnings revisions over the last, month or so. And for us, consumer discretionary looks poised to actually perform quite well as the Fed looks to pivot. I mean, if you look at 88% of the S&P 500 consumer discretionary companies all beat expectations. And so in the soft landing or the soft-ish landing, we see that the S&P 500 continue to push higher.
So it's possible that rates don't go up enough for multiples to contract. So let's say multiples stay where they are, and then earnings grow 10, 12, 15%. Then it could be reflected in the price of the stock.
Yes, definitely. And I know there is still that concern of a contraction and how that's ultimately going to impact earnings. If we do see stronger, resilient growth, and I believe in sort of a no landing scenario, then you could see somewhat of a contraction. But right now, I feel like the data is telling us that soft landing is very much in play, and from there, you should start to see higher levels, or at least us being able to reach those all-time highs again on the S&P 500.
I mean, stocks aren't just as far as multiples go, they're not cheap.
No, they're not. I mean, but if you do back out that magnificent 7 names, and we've seen a bit of narrowing there, and the equal weighted is at 16 times earnings as opposed to 19 or so when you're looking at with the Magnificent Seven. So some of the air coming out of there is room and valuations across the board.
But then those are the ones you might want to own because they will grow.
Oh no, I mean we're not saying not to own them. I just think that you can get some of that bounce back and a little bit more bang for your buck if you're looking at the equal weighted and starting to look outside of those 7 names. I know a lot of clients love them because that's sometimes how they got to where they got in their portfolio, their concentration there, but there are other opportunities outside of the 7 for sure.
So gold or Bitcoin? If you did Bitcoin, would Jamie come and see you and say, AJ, it's name on the Bitcoin Bay?
Very good.
Yeah? Nailed that. You don't want to comment on. We were just talking about Jamie.
You sell it in some funds, though, I thought now, don't you?
When it comes to when we talk to clients about, because obviously clients want to be diversified, they want to grab onto the newest technology. I think we haven't seen enough when it comes to the history about allocating to sort of crypto in general. But we tell them, obviously we can't advise on allocating to it, but don't put any more than you're willing to lose into that positioning. And then obviously you look at some of the regulatory headwinds there.
So if you're talking to a client about it, I mean, do you go, look around and see if Jamie's... Yeah.
No. I mean, we do have a target on gold, and, I think a lot of portfolios need to be diversified at the end of the day, so having...
Gold's held up, but...
Yeah.
God, it's been at 1,900 forever, right, basically? Not really, but AJ, thanks.
Thanks for having me.